Good afternoon, everybody. Welcome to the TraderMerlin Show. It is your Wednesday edition. Took me a while to wind that one down. It's your Wednesday edition of the TraderMerlin Show. Obviously, the market's ending the month of August on a little bit of a sour note. We'll talk a lot about price action today as we progress. And one of the things I wanted to do this week is obviously brought on a lot of different guests. Lately, I've been doing a lot of shows independently, which is fine. But, we got a feedback loop there. I think, Jeff, your microphone might be muted, feeding back there. But anyway, I try to bring on different guests to the program so we can get a perspective of how everyone is trading, what their styles are, and what might be important to each of those individual people. And I thought, let's just bring on Jeff Manson today to talk about trading price action. As you can see here, trading futures price action is the topic du jour. Joining me from sunny and always hot Arizona, we've got Mr. Jeff Manson. Jeff, how you doing, my friend? Back there. Are you there, Jeff? You're muted, Jeff. I think he's trying to fix his microphone. Uh-oh. El Jefe. You're muted, buddy. Tick-tock, tick-tock. All right, so this is where we have to do the shuffle until I hear Jeff's microphone come back through. I think he just unmuted it, but...
Yeah, I'm doing okay. I'm some weird sounds, so...
Yeah, I did hear a weird little feedback echo part there. Fix his microphone. Uh-oh. Oh, you're watching the stream, so mute the stream. The YouTube stream that you're watching, you got to mute that. That's your problem. All right, well, while I let Jeff get ready and fix that mute on the stream, as I mentioned, we brought on a lot of different traders over the past couple years on this program, and I think the important part is to know that every one of us has our own little unique way of approaching things, whether that's using technical analysis, fundamental analysis, even looking at tea leaves and crazy things like that. Now, you guys have seen Jeff in this program several times, and he's always one that is very analytical, very detailed. And I love the comment here from Trader T. He says, Jeff is a complicated man. Way too much details for me. Well, I think the important part to remember is the devil is in the details sometimes. And it's important to pay attention to those details and be as specific as we can with regards to rules. So let's start talking about some of that. Here we've got Jeff joining us today. All our audio has been fixed. Jeff, how you doing, my friend?
Hey, doing great. Thanks for having me, Merlin.
Always a pleasure. What have you been up to? It's been a long time since I had you on this program. I think last time you were saying markets are going to like 15,000 or something.
Well, it may still get there. We've got to change some of the political things around, and maybe things will work out better. But no, I've been traveling, been working. We've been working on the elite trade, getting a lot of new students. Trading live with them, having a good time. Really, being a complicated man there, getting more details and refining my trading plan using all that price action that you were talking about there.
Mm-hmm. Well, let's talk about that for a second. Since we're talking about trading price action on futures markets today, I guess we could say it's really trading price action on any market, but your specialty is the futures. I'm going to kind of go with what Trader T said there, which was that you're a complicated man. Now, there's this old adage in the markets, the KISS method, right? Keep it simple, stupid. And for the most part, I think that actually is a very good way to go. But I think it also has to match your personality type. And you're one of those types of people in the years that I've known you that wants to know all the little nuances of the details. So if you're keeping it simple, and I got my foundational aspects of my trade set up, you like to go and say, okay, I've got this simple setup. Let me go in and tweak it with more details and be more specific. And I guess walk me through why that is. I have my perspective of why you like to look so far in those details, but how does that help you?
Well, digging into details as an educator and as a teacher, I realized that when people kept it simple, they left everything wide open to their interpretation of what is simple. Okay, so the details and the specificness of the details help me as an educator, help us at the Elite Trade be very specific so that students can actually follow a rule-based, systematic, step-by-step process. And without the details, there's no refining or getting that specific picture that you need to see. And it is, to me, in trading, it is about the picture on the price chart. And what I've noticed a lot of people doing is taking their concept and putting it on just a simple like 60-minute or 30-minute or, daily chart, and then trying to squeeze it in, and it doesn't work that way. So we need to be able to adjust that price action up or down in time frame to get the right picture, because the picture is what aligns everything and makes us feel good about taking the trade.
Right.
And also the specific details too.
There's so many ways to skin this cat, and obviously we each approach it from our own different angle. I had a question that came in. Let me get it to real quick from Michael, and it's a simple one, and maybe it ties into this level of details that you like to look at. He says, "What technical analysis tools does Jeff use for trading?" And maybe you can talk a little bit about that. I know that over the years you have been a huge fan of Fibonacci. I know you like to use some technical indicators, not all of them, but certainly some of them. So maybe a little information on kind of what is your, I guess, your setup. You start off, as I'm assuming, with supply and demand, right? It's understanding what's going on with price, but then what layers do you add on to that when you make your trades?
Well, what we've discovered here and what we've put into our trade plan here is something really basic, like support and resistance, but qualifying support and resistance with a minimum number of times that prices hit a resistance or times that prices hit a support. Now, why is that? Well, the reason we look at support and resistance is that's where orders, so a resistance level is where more sellers step in than buyers, right?
Yep.
Price keeps coming down out of that area. And also support, price keeps coming out of that area, because that becomes the battlefield. Once price breaks that support or resistance, the area below or above becomes that territory of where we find buy tickets or sell tickets. And of course, refining that territory down into a zone, you have to have that process. So starting off with something really simple as support and resistance. To a supply and demand trader, support and resistance is a very strong and much needed picture. And you'll find it over on the left-hand side of the chart, not on the right side of the chart.
Right.
Okay. So the support and resistance marks these areas where we start to dive in, and then of course break that area down by determining if it's a resistance area, then the area below it would be all the buyers, correct? A buy territory. And then within that buy territory, there's some structures that we look at. And whether we're making higher lows or lower highs and so on, in that, with those structures, it helps me refine the area that I need to look for as a zone. And this has been absolutely amazing transformation going through this. And there's so many different fractal pictures, of course, of those areas. You might find multiple buy territories in a specific area or sell territories in a larger one. So the fractals are part of it. But as far as technical analysis, I do make reference to a 50-day moving average when watching the indexes. The indexes as a whole, the 50 and the 200 moving average on a daily chart, are very specific areas that traders make bigger decisions. And not just the little traders, but a lot of the bigger, the retail, and then of course the institutional traders.
It becomes really psychological, right?
Average. Say again?
So yeah, you just said simple moving average. So that's part of it. One of them, a lot of people like to use exponentials. I prefer on the longer term daily charts like you do to use the simple moving averages. And as you're looking at this chart, and I brought up the S&P here and I just put a blue line. This squiggly blue line is the 50-period moving average. I know I've got a little bit of too much artwork on my chart as we speak, but this is a really important one, especially for anybody that's looking at longer term trades, right? So a 50-period moving average probably not going to impact anybody that's looking to make a 5-minute day trade. However, we always, or at least I always approach this, and I think Jeff does as well, is start at the higher picture time frames and see where things have come from, right? Where are they going? And if you look at this S&P, it was very logical to think that just 2 days ago, we should have had a nice bounce on this S&P. And did we? Well, we did. It started off with a bounce because it was hitting that 50-period moving average, but then closed below it. And this is fairly important, and I think you would agree, Jeff. If you look at here's the S&P with the 50-period closed below it. Here you have the NASDAQ, we're closed below the 50-period moving average. Here you have the Dow, which is below the 50-period. Oh, and just take a peek at the Russell, which is giving a little kiss today. Does this all of a sudden make you kind of look at it and go, we're kind of turning the corner here on a pretty important technical indicator for the broader markets, and now I need to maybe set my ducks up in a row for a bigger picture short?
Exactly. And you'll notice if you use a daily chart and you put a 50 simple moving average on it, that each time, and you have to use trend analysis in this as well, but in a downtrend, that first close bar below the 50 simple moving average often leads to more close bars below the 50 moving average. Okay. In an uptrend, it may close below and then retaliates and go back above. So using trend analysis along with that 50 simple moving average, we're expecting a few more down days. And today was the fourth down day in a row. I believe it's fourth down day that we've had. So we're expecting one more, which would be the 5. And then, of course, I'm looking for a little bit of a bounce. And those are some more of the details.
Nice. Well, and it's funny because you look at this price chart here, and yeah, we've had 4 down days. I know some of you are going to be like, well, wait a minute, there's a green candle in there on Monday. Well, guys, that was a gap down, and it's still a down day. Even though that candle is red, it still is a down day. So yeah, four down days in a row, and conveniently coming right back to that 3,900 level, which we talked about at the end of last week, is kind of being the next logical target. Now, does that play into it as well? You're saying, okay, that 3,900 area, or actually 3,920 would kind of be my spot mark. We're at 39. Am I talking wrong? 3960 is where we are right now. 3920 on the S&P futures is kind of where I'm expecting it to run to maybe tomorrow, maybe by Friday, before we get that nice rally up. Is there a reason for the 5-day thought? Is there a pattern to your 5 days?
The 5-day.
Well, you said we've had 4. We're expecting one more.
Yes. If you don't have a life like I do sometimes, and you start counting the number of red candles versus green candles, and once we start to see that they come in very heavy groups of 1s, 2s, 3s. If it has 3, generally it will go to 4. Okay, and sorry, if it has a 4th down day, it goes to 5. Okay, if it has a 6th down day, it usually goes to 8. So kind of bringing that Fibonacci number back into play. But I've used this in my own trading to kind of anticipate that if we did have 4 down days in a row as of today, okay, then the 5th day is typically down, but the 6th day more likely will be up. And that'll coincide with what I was just describing in a downtrend when price closes below the 50 simple moving average. Okay, usually get one more big down day and then you'll get a couple of up days. So that it's multiple things kind of coming together to anticipate a big drop either in the overnight or extended hours session and maybe into tomorrow, and then look for that demand zone that you've been waiting for a good size bounce coming here. Let's see, we'll probably be looking at Friday now.
Yeah. My number for the S&P, just for everybody that's watching me draw on the charts here, is about a 1.1% drop, 1.01, call it 1% even, price decline in the next couple days before we get to the bottom end of that demand zone that goes back to late July. Margaret's saying, does Jeff have his own charts to share? She doesn't like to look at my charts. You're welcome to share yours if you want. I don't know if you're drawing along over there, but you're always welcome to share your charts there, Jeff.
Let's see, this says a host is disabled to sharing.
It always does. I don't know why. It always seems to be a problem, but now it's all yours. I figured it out now after I've done this a dozen times, but now you can share your charts with the audience.
Let me just move something out of the way. And
sure, as you do that,
go ahead, sir.
Rob says, are all buy and sell orders visible for everyone to see? Absolutely not, Rob. It's really dependent on what firm you trade with. So if you trade with any firm, they can see your orders, right? Any company that you are trading through can see your orders, but let's say you have orders sitting, you trade through Charles Schwab, Goldman Sachs can't necessarily see those orders. It's that individual order book, and it depends on how those orders are processed through to the exchange. Some are passed through, some are sold, so it's not an easy answer on the big picture. I would say no, your orders are not visible to everybody, just the specific entity that you're trading through. All right, here we go. We got Jeff's charts up there. And I got your video on it as well. Look at it, just winning here.
Here's a kind of a map of what I look at now. The sell territory is decided by where I have at minimum 3 touches of support, And then the area above is that sell territory. And then I look for a zone within that sell territory. Now, once price breaks that support, we know there's no more buyers sitting there, but there still may be some sellers left in that upper range there. And we look for that leg-based group of candles that we teach at the Elite Trade. So all of this area, finding the resistance, finding the support, and then also notice I have an area, I think you guys refer to it as a white space. And I've really outlined the white space for myself as, and here at the Elite Trade, is the area between resistance and support, okay? And often price goes through these areas fairly quickly, okay? And I found that demand zones inside this area don't work well, but breakout trades work great. And of course, down here, we have our resistance and we have our buy territory. So this gives an idea of what is most important to me is not necessarily the zone, but is there enough money to be made? Is there enough move in price to make it worth my while? And also seeing where those areas like a pocket of points are playing out at this. Is that more what you were looking for?
Yeah. No, first off, we will love to see what you're looking at. And I like the way you draw your charts because you kind of, I just generally use yellow boxes liberally on my charts and keep it very, very basic. You're actually outlining specific congregations of price, if you will, or different pockets within that chart with your boxes of red or green, obviously highlighting where we are in relationship to curve, etc. But also, I like your last point, which is even if you have a good demand zone or supply zone or sell territory, buy territory, you want to call it, if there's no profit potential there, and it's not worth the risk, meaning you don't have a specific risk reward that you've defined in your trading plan, then don't take the trade. And I think a lot of traders don't do that. I think a lot of them will map out the trade and say, okay, here's my entry, and I'll make this much, and they don't think about the losses. Or vice versa, they have their stop loss so tight that they get stopped out right away. Or they plan out this trade and they don't look at what the profit potential is, or they have it too lofty of a goal. So being realistic with profit potential to me is a critical one here. Making sure you've at least got the skin on the bone to make that trade.
Exactly. We had some really great, and part of what I cover here is that using the three touches or resistance on, I do go down to smaller time frames and make sure that everything, the details there, is that I also like to participate in that trade here at the breakout, okay? Because you always need that breakout before you can identify where a demand zone is at, okay? And that's what qualifies a good trade. So this area over to the left-hand side of the chart, the resistance area showing me where the sellers kept stepping in, and then once price went through it, there were no more sellers left. So that makes the area down below, if there's not a support, this would be more of that buy territory, and we'd look for those zones within that range there. So just really simplifying the picture, and there are some greater details that I look for in the zone, and I look for a very specific group of candles, but it's also about drawing the right picture on the chart. We had a great trade that was called out this morning on our in the live trading room, where we had a very small zone. Now, if you look a little bit closer to the left-hand side of the chart, you'll see that I had that support area marked, and then there was a sell territory just above it. Okay, so this is where I was anticipating the sellers to step in. Okay, and of course, we had to turn down the time frame in order to find the right picture. Why we called that zone 12,493, 12,529. And actually, I didn't call this one. My partner, Caitlin, did. And then there was also another one down below here, and it was on a smaller time frame. If you break it down, you'll see that there was another 3 touches in here, of course, on a smaller time frame. And you drill into that area, we had that first test. Okay, so there was an opportunity twice to take the trade, once short right at the open, and then once long as it dropped down into that area. Okay, so again, having that picture mapped out, and crude oil is another really great example of what to expect on a little larger time frame. Every time I recognize that we're in a big sell territory, I start looking for opportunities to take trades short in this range. Now, as price starts to turn back up, we may be building some new fresh accumulation of orders, which will then give the same picture and help us to look for those buy orders within that buy, or the zones within that buy territory. I hope that helps with the picture, but there's not a lot of indicators on here.
Yeah, no, and I think that that's something that you and I have in common, is that this lack of reliance on an indicator and saying, I'm just going to use the information that's present, which is price. And, you know, most people like to have some crutch, which would be a moving average, stochastics, Bollinger Band, what have you. All of those things are derived from price and time of some combination, or volume even. So if you look at the price with just price and time and volume on it, you should be able to determine what those indicators are saying anyway. So I guess the question for, who was that? Was it Thomas? I forgot the question, or that was coming in on that one. From Michael, what technical analysis tools does Jeff use? I would say that Jeff probably is going to say he'll use moving average to kind of assess the big picture. He will also use Fibonacci to kind of expect where prices may go in the future or may retrace back to. And you're still a big fan of that, but I don't see any fibs on your charts.
Well, the fibs are there. I see them naturally now.
It's so funny how that is.
And that's, you know, one of the things, you know, that yourself and myself, we have a lot of experience, many years in the market. So we kind of downplay the indicators and oscillators, but those were our crutches when we first started. Mm-hmm. And we had to go through that journey. As educators now, we want to shortcut that journey, because more successful students means more profits for us, you know, and more students. So to keep it simple, I've kind of eliminated, not eliminated, but I still use Fibonacci in there, but I use it with the supply zones and the demand zones. So I have that zone within a sell territory. I can quickly just grab from the distal line and come down to the drop. And then I can put the Fibonacci line, the 88.6 up there, which is very common. And I can see that that 88.6 lies right within that zone within the sell territory. And Fibonacci and indicators and oscillators are never used only by themselves, okay? It's where we look for many traders thinking the same thing at the same price level. Indicators, oscillators, or more of a confirmation afterward. Fibonacci and supply and demand could be more of a forward-looking technique. And so I don't want to downplay people looking at indicators and oscillators. It's part of your journey. But if you want to shortcut it, learn and understand truly what is supply and demand, okay? And it sounds like such a simple concept, but there's a lot of details in supply and demand. First is to know where the sellers kept meeting buyers all the time, and where the buyers kept meeting sellers all the time, okay? And once that battle gets broken, that becomes the origin, or you look up and left or down and left to find the origin of that move. And of course, all the little details that come out after that.
Yep, and there's lots of those details. Let's see, NJ says, do you guys use NinjaTrader, Thinkorswim, or TradeStation to trade futures? Have you heard of Top Step futures trading? It's like a 70-25 distribution. I'll start with the Top Step. I'm not a fan of prop shops, and basically what that is you go into their organization and they provide the capital and you get to keep 25% of the profit, or I forget what the breakdown is. But you're using borrowed money, and I'm not a fan of that. For me, you shouldn't be trading unless it's money you can afford to lose. So go in there with your own capital, learn how to do it, and do it the right way. So I would never use a prop shop like Top Step or anything like that. As far as for futures, I do most of my futures are going to be done through Trade Pro Futures or using TradeStation. And Jeff is using, you got TradeStation up here. I'm assuming you're using TradeStation as well.
Yeah, I use TradeStation and a couple other brokers. Not so, I mean, for my active trading, I use TradeStation because I like the charts. I'm able to manipulate the charts to where I need to, so.
Let's see. Skilled Stocksman says, what are Jeff's rules for trading momentum and breakout trades rather than waiting for supply and demand areas? Oof.
Well, always looking left and look for a support or resistance area. I mean, keep in mind, and I keep reiterating this, if you're looking to the left and you're finding resistance several times, okay, that's the area where there's more sell tickets and buy tickets. Now, that area resistance, let's just say, okay, I need to see minimum of 3 touches for resistance or 3 touches for support. 2 doesn't work, okay? But 3 touches tend to, more often than not, minimum 3 touches, okay, tend to take out all of the sell tickets or buy tickets at that area. And that's where we look for that big move. Now, you can always anticipate that the breakout trade, it will be elevated risk, okay? There is often some other details. I look for my zone, okay, and I'll say my zone, which is our leg-based group of candles, okay? I look for that zone to have formed, and this is where we come up with a pending zone. And the pending zone is basically a group of candles, what we call the leg base, okay, that has formed, but price has not yet moved greater than 2 to 1 away. Okay, so a pending zone. Once price has moved greater than 2 to 1, then that zone becomes an active zone. Yeah, there I get complicated man again.
There's that complicated Jeff.
But it is very specific detail. For example, today, some of the specific detail, most of the indexes all the indexes started off as an inside day. Now, as you've been around me before, inside days, choppy and designed to take your money. Well, what we've noticed also is that breakout trades often fail when we're inside the prior day's trading range. There's no momentum.
Right.
And we saw that several times today where you might have taken a breakout, okay, and immediately got whipsawed out of the trade. It was until price broke above or below the prior session's range is when breakout trades or those momentum can be used, okay? So going back to the question, what are some of the criteria? I look left and I look for where we've had 3 touches, 3 resistance or 3 support, okay? And then I look for that opportunity where I have my leg-based group of candles form before the breakout. Now, another important part about that leg-based group of candles is that marks my risk on the chart, okay? And several times we've had the risk was too big for my trade plan based on where the leg-based group of candles was. And if I was going to take the breakout trade, I had to risk a lot, okay? For example, if we're looking at that corn trade again, you see the breakout was down below and my leg-based group of candles is way up here. So my stop loss would have to be at the distal line up here. Well, there's no way I'm going to risk that. So I avoid taking the breakout trade on that, okay, and wait for supply and demand. And a lot of these details that I'm bringing out are really specific to my personal trade plan and our trade plan that we teach our students at the Elite Trade.
Yeah, I'm watching all those you go through all this and kind of thinking of how I do breakouts. And my way, skilled stocksman and Eric, who were asking about it, I'm a little bit more simple than that. However, I'm not my rules aren't as rigid. For me, for a breakout trade, if I see something that's kind of going through an area of consolidation and moving sideways, I'll map out that zone, and you guys have seen my yellow boxes a lot on the chart, and say, if it gets out above this, then I'll make that trade immediately if it's just a few cents above it. Now, that is an incredibly risky type of trade, and as I saw come in chat here, you also have to be extremely quick. You can set up automated orders that says if it gets above a certain price level, go ahead and buy me in. But what'll happen quite often is it will break out of a range or zone, and then it'll come back and retest it. And depending on how you've set your stop loss up in that situation, quite often it'll take you out, because a lot of people will set it right at the breakout level. Well, that's not going to work. So for me on a breakout, I'll buy immediately if it breaks above that overhead supply area, but I'll also put it down, my stop loss below that overhead supply area. So when it does retest, if it does retest, then I should be safe, but not always. Breakout trades are volatile because there's emotion. There's a lot going on when those things pop through. It could be conditional orders, could be people just sitting there waiting by their screen, or institutional orders. But a lot of times when you see something break, the volume really kicks in. And you don't know if that's the beginning of a new trend, or it's going to, run up and see kind of the supply level way higher. It could immediately rip right back down. A good example would be what we had happen on the S&P 500. Here's the daily of it on my charts. I've got this yellow box, which I just kind of mapped out an overhead supply zone that goes from roughly 4,250 all the way up to 4,300. Well, we tiptoed across that one day, got in long on a bunch of stuff on August 16th, and 2 days later, I'm stopped out. Well, that's okay. I'll take that little loss. I was looking to join and pop on that breakout trade, but it didn't work. And here we are now, significantly lower than that breakout. I called that a bull trap, right? We're down, let's see, how much have we dropped there? Roughly 9% since we had that little bear trap, bull trap. Anyway, you're doing some drawing over there, Jeff. What are we looking at on your side?
Well, just a quick example, and of course, I use the left-hand side of the chart to find these examples over and over and over again. And there's no better way to use, to learn is the left-hand side of the chart, understanding what is a picture-perfect trade setup that has already happened. Okay, so as we're talking about a breakout here we have Amazon. We can see that I have the red area is my resistance. There were more sellers than buyers, more sellers. Okay. And just as a quick little glance here, we had price run up into the sellers and pull back. Okay. So this already happened. We made a higher low, which generally tells me that my zone should be close to the breakout portion. If there's no higher low, then usually the zone is located a little bit lower. Okay.
Mm-hmm.
So the opportunity was once I had the 3 touches and then price broke out of that range, that is where I could go long. But I would have to remind you that my stop loss would have to be down here at the distal line. This group of candles formed before the breakout, the origin of that strong move. Once price came back down to the origin of that strong move, there were still some leftover unfilled orders. And that's what it's all about, is understanding where was the battle, where was the origin, where's the buy territory, and where's that zone within the buy territory.
Right.
Okay. And then, of course, you can also keep training your eyes to see the structures. And some people learn by using the geometry first. And that was kind of my journey, is learning that geometry and getting past all of the red and green candles. Okay, is seeing that picture on the price chart. Okay, and that brings us up now that we had the support right here on Amazon, and price has broken that support over the last couple of days, and then we made a lower high than the prior high. So again, my eyes get trained, go right to this area and start reducing the time frame and find my group of candles that allow me to participate in a trade after price has taken out all those buyers that were left over.
Yep. Quick curiosity. We talked about technical analysis. I think it was kind of an interesting one. I notice your lines you're drawing over here. I can't help but to think, Jeff, are you a practitioner of Elliott Wave? Are you an Elliott Wave fan?
Oh, absolutely.
Damn it! All right, we're gonna stop the show today. No, I'm just kidding. Well, the only thing it bugs me about, here's what I hate about Elliott Wave. Elliott Wave is always this 1, 2, 3, 4, 5 ABC, and then that's always the pattern, right? And then if it doesn't work, they always like, well, I'll redraw that line here. Now it works. And really what I'm all about as a trader is not the 1, 2, 3, 4, 5 ABC. It's just the 1, 2, 3. Give me an impulse. Give me a correction. Give me that simple construction of price action, and it'll do fine over time, as opposed to saying, oh, I'm expecting to see 3 of these moves up and 2 of them down, blah, 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 blah. But they become fanatics. It's almost like people who like Apple fans are the equivalent of Elliott Wave practitioners.
Oh, I love.
Although Apple works.
Love to quiz somebody that's practicing Elliott Wave, because they almost never draw them in the right place.
And they keep changing. I had years ago, I'm one of those guys who I will be a sponge of information when I was starting out. And I remember I was talking to this guy, and this was a trade show, and he gave a presentation on Elliott Wave, and he's the big guru, and everyone's there to see him in a crowded house. And I said, let's look at some charts here. And he says, oh yeah, well that's what this should be. And I didn't show him the full chart. I just showed him a little piece, and I scrolled over and said, now what? And he goes, oh well, you would redraw this leg and then redraw this one. So okay, well, let me move further over. And he just kept redrawing until I go, man, that's not how this works. You have to make a decision at some point.
Exactly.
Anyway, had to throw that one out there. Let's see what other. There were a couple questions that came through here. Larry, you said, how come OTA has nothing to do with support and resistance? I personally find it beneficial for my trading along with supply and demand. You got to understand, Support and resistance is one-dimensional. Generally, when people use support and resistance, they draw one line and say this is support and this is resistance. Supply and demand says let's quantify a range around that area. That's all really the only difference there is saying they're essentially the same thing, but from my perspective, supply and demand says let's wrap a zone around that area of support or resistance and quantify how strong it might be for those missing orders. So it's not that we have nothing to do with it. It's just, to me, if you say support or resistance, it's one dimensional. I'll give you an example. Let's say you're walking down the street and you're walking on the sidewalk. It is what? It is supporting your weight, right? It's holding you up. But what if that sidewalk was 1 millimeter thick with concrete? How much would it support you? You're going to fall right through. Or what if it was 85 feet thick? It's a much stronger area of support. So that's the analogy I'll look at with regards to, support and resistance versus supply and demand. It has everything to do with it. It's just quantifying it to a much greater extent. What else? How much money?
I like that support and resistance area because that's, you notice on my charts, I was using a box. I wasn't using a straight line.
Mm-hmm. But you also look at supply and demand. I mean, you have that general concept. Most people, when you start out, a lot of people just take this horizontal line tool like you have down on the left-hand side of your chart. You got some black lines going across the top. A lot of people take that black line and say, that's where it's absolutely going to turn. It's like, no, there's a range there that's going to turn at. And that's the difference.
And also, what's going on here? I mean, if you were to really just take all the noise off of here, the only thing that happened right at this point is there were more sell tickets than buy tickets. That's it. And there were more sell tickets and buy tickets. And there were more sell tickets and buy tickets. Well, quite often, as price absorbs all those sell tickets, there's no more sell tickets, and then price breaks through it. Okay. And that's one of your first odds enhancers is that move out. I got to quote Todd here. Move out takes out all the rest of the sellers. Okay. So that move out right there was a lack of any more sell tickets. And this is, what I mentioned earlier is you really truly need to understand on the chart where the battlegrounds were. Resistance is where sellers came in more than buyers. And right over here, support, okay, buyers came in, pushed price up. There were still more buyers, and more buyers. So that whole area became a support. Everything above was sellers, okay, because price came down or sell tickets each time price got up into the range. Now, I use that information once price breaks that area where the buyers were coming in to help me identify where the imbalance is. And statistically, and okay, where I get complicated is I look at the structures inside of it. And one of the structures I look at is whether we made a lower high or a lower high or a higher high before the price broke area. And very often when price breaks that area, the zone is really close. Or if it makes a lower high, the zone is really close to the breakout point.
Yep.
It just helps me get in the right area.
Right.
Doesn't mean I always take every trade.
Right. Yeah. I mean, that's the key. I mean, it's one thing to set it up. It's another thing to actually pull the trigger on it. Map these things out. And if they work for you, they work. And if they don't, they don't. One thing that I think is interesting. You guys hear him talking about tickets and unfilled orders. I think it's Newton's first law of motion says that an object remains in motion until met upon by an equal or opposite force. And if your buyers are pushing price up, that's the current driving force. And until it meets more sellers than there are buyers, price will continue to move up. And I think that's what Jeff's illustrating here is his ability to read that and say, here's where price lines up, and here's where I'm anticipating there being a congregation of buyers or sellers or just orders in particular in the system that could cause price to go the other direction. So we're basically becoming Newtonians, all of us here. And the Newton laws of physics.
And also the other concept here is that at this point, there was a total lack of sellers right here. There were not more buyers, okay? See, once price broke and made that gap, okay, there were just no more sellers. Price had to run up to find the sellers. And you kind of have to flip the concept around. And that's why supply and demand is so important to be fully understood, is that price only moves to places where there's more orders. That's what the algorithms and the computers do in the market to keep our market liquid, is if there's no orders, they keep adjusting price up until they can match some tickets up. Okay.
Right.
So a lot of great concepts, a lot of things we're covering today.
Yeah, it's some good stuff. Let's talk about your offerings as I look at the clock here, and we're getting near the end, and I got to wrap up because it's sweating and my AC just does not work up here. You obviously started the Elite Trader. You and Caitlin have been doing that for quite some time, and I'll bring up your website here for you to talk a little bit about what you guys have up and coming. I know you got classes all the time, so your page is up. What's our elevator talk for Elite Trade?
Well, we have, as Caitlin and I are traveling a lot around the world, we have a lot more traveling coming up, places like Dubai and Jordan, Kuwait, Goa, Jordan. There's some really exciting things coming our way. What we teach at the Elite Trade is how to train the eyes, look at the picture on the price chart. I really don't get into teaching people multiple assets because so many traders come to us to learn how to see the price charts and identify areas where price can change direction. We currently have a live trading room, which we do Monday, Tuesday, Wednesday between 9 a.m. and 10:30 Eastern. And I'm also starting another class next week where all we do is just sit and draw the boxes and draw the zones. We have a support tool for what we do after mastering the charts. Mastering the charts was formerly training the eyes, and we've modified that and enhanced it quite a bit more than what it was in training the eyes when I was with Online Trading Academy. We do have a class coming up in October for that. And you can, of course, just visit the website if you want to see the calendar and see where upcoming events and things like that are at. And but there are so many exciting things to come up. Recently, in our live trading room, we've started to enhance our live trading room by using some what you guys use as prep screens. We call it a prep screen too, just identifying our zones. Our purpose is not to just sit and trade futures or Forex or stocks. It's really to train the eyes to see these pictures on a price chart. And it doesn't matter a time frame for us. It matters we get the right picture.
Right.
And so, yeah, a lot of exciting things coming up.
Cool. Good. And I have also here Twitter, so if you guys want, you can follow them on Twitter. Ooh, I had it up here. Where did it go? You just go to @the_elite. Oops, I can't even type. Elite Trader. There you go. The Elite Trade. Excuse me. There's your Twitter feed. So they post some trades on there as well that you guys can follow and get an idea of what kind of things Jeff and Caitlin are talking about on a regular basis. So, Jeff, well, hey, thank you so much. I'm gonna let me see if I can take this. Can I take the screen away? No. Well, you're still off on you're sharing your big screen there.
All right.
I think I could actually go through. There you go. All right, let me close that one out. There, now I got your beautiful mug up there. Well, hey, thank you so much for coming on the program today, and appreciate you sharing some thoughts on trading price action. I think we kind of went took that topic and ran with it a little bit, went all over the place. But I appreciate you coming on, and best of luck to you in Elite Trade.
Hey, thank you, Merlin. Thanks for having me and having us here at Elite Trade. We'll look forward to maybe doing it again. Love talking about price action.
Sounds good, my friend. Take care.
Thank you. Bye-bye.
Bye. Guys, that was Jeff Manson of theelitetrade.com. You can find out more information at their website, which I had up there as well. And, it's nice to kind of get a taste for how these guys approach things. And that's one of the main reasons I like bringing on, other traders and other schools is ultimately you have to make your decision of what you resonate with, what style works best for you, what personalities you feel are going to be good educators. Or, it's funny, a long time ago, I remember there was this one guy, he went to the corporate and he was in one of my classes and he went and filed a complaint that I was just cold, unapproachable, and I was rude. And I was like, well, he nailed it. No, I'm kidding. I guess maybe part of it was I gave him some tough love on some of his positions, but sometimes you just don't resonate with people. And there's some people that don't like my style, and that's okay. That's fine. There's some people who I don't like their style as well. But bottom line is find out someone that fits best for you if you are looking for a coach, a mentor, or a school to go to. There's obviously tons of different schools and entities to help teach you trading and investing and whatever you want to know. That's Margaret says Sam. So Sam is not it's not the teaching style. It's just him as a human being. I think he's a scumbag. So it really, he really isn't even that great of a teacher. He teaches one thing. He's such a clown. I'm going to just do this real quick just because I think it's fun. Where is the donkey of the day? Here is the donkey of the day. The donkey of the day is none other than Sam Seiden. Yeah, that's right. I think he's a donkey. And you know what? It's funny, if you go to Power Trading Radio's old shows and you look at any time I had Sam Seiden on the show, I would. You see how Jeff flowed today? It's because Jeff. I feel like Jeff really understands markets. If I brought on Sam any time in the past, he would simply go, I don't know about that. So Sam, what do you think the S&P is doing right now? What do we think about inflation? What do you think about this? What do you think about Elliott Wave? What do you think about stochastics or Bollinger Bands, MACD, RSI? He'd look like a deer in the headlights. And the only way you can get him to talk is go, oh, I'm sorry, Sam, I didn't mean to confuse you. Can you tell me about supply and demand? And there's like, oh, here we go. I understand supply and demand because I was on the floor of Chicago and I was a floor trader. No, you weren't. You were an order taker. It's like saying someone who played for the ball boy for the New York Yankees was playing on the New York Yankees. He's the ball boy. You weren't a trader on the floor of the Chicago Mercantile Exchange. Anyway, sorry. You had to mention it. Anyway, yeah, I haven't done a donkey of the day in a while, and why not? I just thought it might be kind of fun. Oh, Gabe. Yeah, Gabe. You know, it's funny. Gabe Velasquez, I actually interviewed him. He's a great guy. He's a great trader, but his personality, he has a different personality, right? We all are unique in our own special way. All right, now that I got that one done, let's go to what's happening for tomorrow. There's a lot on the economic calendar for tomorrow, like a tremendous amount. Exactly. You got it, Don. Hey, Don, good to see you, my friend. Hope you're doing well out there. By the way, my Niners are going to destroy your Chiefs this year. Just saying. Here's your economic calendar for tomorrow. Of course, I want to run through some of the numbers here, and I'll do that in just a second as we wrap up. But for tomorrow, there's a lot of stuff happening for the markets around the world. You can see at the top of the list here, a lot going on for the European Union. You've got manufacturing numbers for Germany, France, Italy, as well as the EU overall. You also have EU unemployment rate. So could be a pretty interesting, volatile day for the European markets as well as the euro. Now, for anybody who's been following the euro, it reached above parity just yesterday or a couple days ago. I hope it keeps drifting down. I'll bring up the chart for you. Here is the the big downtrend line you've got, or the downtrend line. Wow, moving average, 50-period moving average, just perfectly down. I mean, there's no reason to think about being bullish on the euro right now. That trend line and moving average are saying it's going lower and lower and lower. However, we're curling back up here, and who knows what this economic announcement might do to it tomorrow. My guess is ultimately we'll probably bounce back up to the 50-period moving average before moving back down. Now, even further on that economic calendar, you can see for the U.S. markets, we've got unemployment claims tomorrow. You got non-farm productivity, labor cost, as well as manufacturing data, construction spending, total vehicle sales, natural gas storage. It's really a ton of big announcements tomorrow. One in particular that I'm very interested in is simply the construction spending. We had a pretty big decline in construction spending, and here we are, the tail end of summer when construction should be booming. They're actually showing contraction. We'll see if that number comes out even worse than before. Let me real quick show you just the month of August. I thought this was kind of interesting. If we look across the spectrum of the different markets this month, bottom of the list was Bitcoin was down 16.72%, just a pretty ugly month. And I don't think we're out of the woods yet. We still have a lot of issues with these lending protocols and Celsius and Voyager, et cetera, and bankruptcy, and now a lot of Singapore stuff. Moving up the list, you have oil down 9.91%. You had NASDAQ down 5.13%. S&P 500, 4.06%. These are all negative. Dow Jones, let's call it 4%. Gold down 2.94%. And finally, the Russell 2000, actually the best performer out there. Kind of crazy to see that the Russell was the best performer. Only down 2% for the month of August. But it's been a pretty ugly month out there. Lots of red. And fortunately for me, I caught some of this with some shorts, but also got stung with a few longs. It is what it is. That is markets. Let's see. Oh, man. Damn, Don. Now, them's fighting words over there. I joke it takes a special kind of person to be an HVAC technician. Then I met a few successful traders. Yeah. Oh, man. You go to these trade shows, and that's where I think the beauty of trading is. Because you go there, and some traders are humble. And those are the ones I like. I like the people that are down to earth. They just trade. They do their thing. They don't brag about it. They get in, get out, and go do something else. And then you get, people who are just unbelievably braggadocious. They're probably renting the Lamborghini they rolled up to the trade show in so they could be all super cool and make people think, oh, this person's rich. And they'll have probably a rented, blinged out $200,000 Rolex on and just fancy clothes so that you take their courses or go to their schools or send money to their prop trading firm, and man, there were some absolute scumbags on these trading expos I used to go to. Now, that said, there's still some good people, but anytime you go into them, you should always be very, very cautious about what someone is selling you, ask to see the details, and never, ever, ever buy something right away. Always, I always tell people, if you ever go to the Traders Expo or the Money Show or any trading event, leave your wallet. If you have Apple Money on your phone, turn it off. Don't give any access to capital while you're at that event, because they are unbelievably good salespeople that will, manage to sell you ice cubes in the middle of a snowstorm. So, anyway, let's see. So that was it. I have no earnings tomorrow. We got Lululemon. Big deal. Who cares, right? Lululemon. It's fine. All right, that's going to do it for me. You heard Don Dawson. You heard Jeff Manson mention Todd Davis's name. Well, conveniently enough, Todd Davis, for the maiden voyage, after asking Todd a total of 3,227 times to be on this program, he's actually going to be on the show tomorrow. We'll talk about the 60 markets he analyzes on a daily basis, and some of you might know that in the Mastermind Grid. A lot of great data. Of course, he and Larry work with an amazing team of instructors to bring content, and the best education content, in my opinion, to the masses. We'll see him on the show tomorrow. So if you have questions for Todd Davis, you can put them down below the YouTube videos. Just simply go to YouTube, put the video, click on the video, and then down below type in whatever question you want us to talk about with Todd Davis of Online Trading Academy tomorrow. If you have anything else, you can email me at TraderMerlin@gmail.com. Until then, happy trading, everybody. I will see y'all tomorrow. Take care.